No, what the fuck is wrong? You jumpy bitch! Now you. Oh, come on, Audrey! Come on, Audrey! Come on, Audrey! Audrey, come on! Audrey, come on! On that butt! Get in here! Get in here! Get in here! Go! All right,
Yo, get up!
Split up! Split up! Split up!
All right, so I'm going to make the argument today, guys, that that Bitcoin is the one that wailed on the rest of these guys. We're getting ready to come back around and kick some ass, and I'm very excited to talk about all of it. There is a lot going on, in case you didn't know this. Well, first off, I'm glad I got out of leverage at the end of last year because it's been quite the ride since. I do want to say, there's a saying, as goes January, so goes the rest of the year. We did close the month with the S&P and the NASDAQ and the Russell all in higher territory than they started, which is a really great sign. We'll look at some of the metrics. I want to say there's like an 87% chance that we end up higher. So it's a good sign for markets. Also, on top of this, we have the Clarity Act. There's going to be a meeting today with actionable figures that are going to be meeting later on this afternoon to talk through the Clarity Act and try and get it resolved. People, not the CEOs of the banking community, but the actual doers, along with the people in crypto, to try and push the legislation forward. I think that's going to be coming really quickly, and I'm excited about that. There's the government shutdown. They're working to get that reopened this week. I think the turnaround on it is going to be very fast. We have the ISM PMI today. So we got PMI. Which one was it for last week? Chicago. And so we're getting the ISM today, though. This will be a very interesting figure. The previous was 47.9. We've got 48.3 and 48.2 for forecast and consensus. I would like to see something in the 50s like what we saw with Chicago. We'll see if that ends up happening. But that data is coming out today as well. And then, again, we've got Iran. Will we attack soon? I think that's going to happen as well. So there's just so much going on right now that we're going to just start heading and talk through it. Good morning, everybody. I don't know if anybody has any questions at all. I'm going to keep going. If you have questions, roll them out. Andre Steno Larson says, with all the regional PMIs out, I'd highlight that manufacturing is doing exactly what we expected once the bonus depreciation window opened a few weeks ago. It's up. And so ISM over 50. Again, we didn't get that. This is ISM manufacturing regression. So he's just predicting what it's going to say. So we were just looking at that. I was saying I'd like to see over 50. That's the prediction that we're looking at when we look at the culmination of all these different regions. I wanted to point out that if you're feeling bad about America, and by the way, we've got Jay Clayton on Squawk Box. I might jump to him just in a second. If you're feeling bad about America, just remember Canada's GDP actual was flat, with a previous of negative 0.3, estimate at 0.1, so they were expecting growth. Did not get it. Not a great sign for Canada. Also, more things to get you excited about what's happening in America, because I think it's really important. In 1 year, communist China is knocked out of position in Venezuela, Panama, and the Arctic. Again, there's a lot of noise. There's always noise. I just want to articulate that there's really good things going on that are not noise. We're also working on Cuba. We're working on Iran. Both of those things could happen by the mid part of this year. So we're gaining strength. I hope people realize that. Kevin Warsh was the new Fed chairman pick. He is brilliant. Mark Andreessen from Andreessen Horowitz agrees with that. He says this is a fantastically good choice. I've known Kevin for 30 years. He combines great insight in economics and finance with keen understanding of technology and business. There is nobody more qualified for this job at this moment of profound technological and economic change. I agree with that. I won't read Trump's whole response here. We are going to look at some videos from Kevin Warsh because I think people need to understand him better, especially if you're not from this country or just haven't been keeping up. It's very positive. We will talk about gold, obviously, today too, guys. It is bouncing. I think it has room to go higher. But I also think there's a lot of washout occurring in that area. So just remember that. Real quickly, Warsh is in. Trump was sure to mention that he is a partner of Druckenmiller's family office. Again, Scott Bessent, Druckenmiller, Warsh. This is the team. And you'll get a better idea why that is in a little bit. Warsh was married to Jane Lauder, a granddaughter, an heiress to Estee Lauder. I believe it. He's a very powerful person and he's brilliant. So I put Warsh plus no government shutdown. We did get a baby one. Plus Clarity Act in the weeks ahead. Maybe this next week. I don't know. To get it all the way through, it's probably several weeks. Bonus, we bombed the shit out of Iran to push them closer to freedom. I want you to hear a little bit from Kevin Warsh. We're going to listen to a couple of videos from him real quickly. Let's listen to him talk about Bitcoin. He has over $750,000 between Bitcoin and Ethereum. So this guy is obviously very pro crypto.
So I'd say I think that Bitcoin does make sense as part of a portfolio in this environment where you have the most fundamental shift, for example, in monetary policy since Paul Volcker. This is a big shift that we're seeing under the Powell Fed, rightly or wrongly. So I'm not surprised in a period of dollar weakness where Bitcoin's doing what it's doing. And I'd also suggest that part of the move in Bitcoin is taking some of the bid away from gold. I think if Bitcoin never existed, gold would be rallying even more right now. But I guess if you're under 40, Bitcoin is your new gold. So I think of Bitcoin as a lot of things, but it's certainly with every passing day getting new life as an alternative currency. And when you see the strength of the euro, the strength of the pound, the strength of the RMB, the Korean won, the Mexican peso, I guess we shouldn't be surprised to see the strength of Bitcoin as well.
So I want to just reiterate, this is very old. You could see Bitcoin in the 30,000s, but it does give you an idea of how he feels about it, which I think is really important. We're going to listen to another one here. Though, real quick, before we go too deep into Kevin Warsh, I do want to jump back. Again, we've got Jay Clayton talking here. Oh, this is VPN detected. 1 second. I got to just refresh something. If I ever use a VPN with YouTube TV, it gets retarded. Oh, my God. I hope I don't have my VPN on right now. Okay, we won't watch that right now. Hopefully, this video doesn't get too choppy. I don't show my VPN going right now, so I'm not quite sure why it's giving the message, but it's not coming up, so we'll leave it alone. He is talking. If I find anything interesting about it, I'll go ahead and post about it. Let's see. I figured I'd tune in at a pivotal moment. Not a bad idea, Jacob. Victor, my X feed, I overflooded of people saying crypto bear is here. Oh my God, there's so many. It's a great sign. Let's listen real quickly, though, to the next video with our new Fed chairman, Kevin Warsh. This guy's brilliant, guys, and I'm going to elaborate on why more here in a minute. Also, the markets are recovering. We're seeing Tesla down 1.6, MicroStrategy's down 6.89, but it was down 7% at one point. Cypher's down 3.2. Iron's only down 1.8. CleanSpark's down 5.74. Bitminer was down 12%. It's only down 9.5 right now. Everything seems to kind of be finding a bottom. I think people are getting more optimistic. The CME gap is going to be great. That just makes it to where we have to go up, if nothing else, to close it for Bitcoin. If you guys have any news events that are coming up today too, I was going through a bunch of bookmarks trying to make sure I loaded everything in. So if you have any news events that are coming up, please say something so that I can take a look at them. Michael Saylor, of course, did buy more Bitcoin over the weekend, so we'll see how much he ended up buying. Victor says, I want CLSK bounce. Thursday is earnings day. Hope to have an AI deal. I don't know if you guys saw this either, but I will be doing I'll be doing earnings, a lot of earnings this year. So if you guys want to watch earnings, you're going to have plenty of opportunity with me. I won't be doing Palantir today. There's Amit and a bunch of other people that are great and are really the kings of that. I will be doing Enphase tomorrow, and I will be doing Iron on Thursday, but I'll also be keeping a beat on MicroStrategy and CleanSpark, and I'll be going to whichever one is most relevant, but I will be watching all of them no matter what. So I'll televise whatever is most relevant, and then which is probably going to be Iron. And then I will be watching all of these on my own too. Maybe I'll do separate standalone videos where I pull them up. I'm using Earnings Hub Pro now to try and get it to where I can better keep track of what's going on with earnings related events and be able to listen to calls after the fact and get all the good stuff. So we should have better tools for earnings, and that's going to be a massive priority for me heading into this new year. I want to make sure that I'm really following the companies. I've crushed it on the macro, but the area I struggled last year is I was just taking what I thought was the easy ride with Bitcoin. Didn't turn out that way. Got lazy on earnings calls and really paying attention to companies. I feel like if I wouldn't have done that at the beginning of last year, I would have done a better job with iron, which Angel just talked about. Yeah, I'm expecting some. Hopefully, we'll get some good news with them this week too. But I think things would have went a lot better for me if I was really paying attention to what was going on in these earnings calls. I will not make that mistake again. Any new news on Enphase? No, I don't think so. It is down 0.49% in pre-market. It does look like it's probably finding a bottom at the perfect fucking place. And again, it's got earnings tomorrow, so we'll see how that works. Could go and back test, but I mean, with a chart like this and the fact that they've been beating earnings recently, you can see that here and here. They've really cleaned up. It seems like they've lowered their expense base a lot. I mean, they're down, 88% or some shit, 89% still. So it's really hard for them to go much lower. If you don't have options, this seems like a really good play to be able to go higher in the future. Excuse me. All right. Anyway. Yeah, they're asking Jay Clayton about Epstein emails, so I probably don't care about any of that anyway. Crazy shit with Epstein. Whatever. We're not going to cover that. Let's listen to Kevin Warsh here. I put Fed Warsh in February of last year. So keep in mind, this is in February of last year, and listen to what he's saying. He's saying the same kind of shit I was saying, and he's been right. So let's listen to him.
Welcome back. Stocks slammed this week amid the tariff back and forth. The S&P 500 tumbled into correction territory on Thursday. This despite two new reports on inflation, both showing consumer and wholesale prices cooling.
This is a 4-minute video.
The consumer price index now at the lowest annual level since April of 2021. While the PPI, the producer price index, has come off of a two-year high.
Can you please hit the
Jobless
like?
claims
Viewership
also
has just
down
been
last week. All of this ahead of the Federal Reserve's meeting next week. Joining me now is the former Federal Reserve Governor, Kevin Warsh. Kevin, it's great to have you this weekend. Welcome.
Great to be with you, Maria.
How would you assess the macro story? And do you believe we're going to see growth in the first quarter or contraction?
So the president inherited a fiscal and economic and regulatory mess, and it's going to take a little digging out to be on a stronger platform for growth.
Remember, this is the person that everybody says is hawkish, and that's going to be bad for markets, right? Yes, we have ISM PMI, so we have the combined total today. Expecting over 50. It should be interesting. If we get that over 50, if we get like a 51 or higher, I think that should be really positive for markets. Again, what Trump is trying to do here is get it to where we're in a new regime, something like back in the 80s and 90s, where when we get good news about the market, it doesn't mean the market goes, or good news about the economy, it doesn't mean the market goes down because people are worried about the Fed raising rates. When we get good news, it's fucking good news. And when we get bad news, it's bad news. How crazy is that? But that's what we're working towards. But remember, this is the guy everybody says is hawkish and is going to be bad for the market. Let's listen to what he has to say.
Listen, my view is that the economy is transitioning from one where we had big government spending, short-term stimulus, and it had a veneer of prosperity. But as you know, Maria, hardworking America.
So what did he just tell us? He told us that he didn't like what Powell was doing or what Biden was doing, trying to pretend to create something good for the economy and that helps the economy, when in fact it did not. It hurt them. All the money printing, all the checks that everybody got, it ended up hurting the people that it was supposed to help the most, the lower to middle class. They're the ones that felt the crunch from prices coming up, this K-shaped economy you keep seeing all these charts of. But it was an illusion of prosperity, not real prosperity. That's what he wants.
Americans weren't buying it. So we've got to build a new platform for growth. I think economic growth this year can be strong with good economic policies, but Rome wasn't built in a day, and so this will take some time.
And it is sort of taking time right now as we watch the market.
And remember, since this time, this was in February of last year, the big, beautiful bill went through. And then we had the tariff war. And so we're just remember all these things, but listen to what he has to say.
Markets get used to a new sheriff in town with tariffs. What is your expectation of the impact of tariffs?
So there's a new view among commentators in Washington, I'm afraid economists, that somehow tariffs are the source of inflation. But inflation's been around for about 4 or 5 years as a result of bad economic policy. So we shouldn't let people get away with saying that, oh, some inflation surge is because of new Trump tariff policy. Tariffs are barely in effect.
Now, remember, this is before the tariff war. So this was us hinting about higher tariffs because that was his agenda. This isn't I just laid down 30% tariffs and 40% tariffs across the entirety of the world. So that was a little bit shocking.
The policies haven't yet been decided. The truth of the matter is inflation is a choice, and the Fed's made a lot of bad choices over these last several years. The inflation monster came about 5 years ago. The Fed's had plenty of chances to kill it, and they've failed to do it. So my take, Maria, is the president's had to take matters into his own hands and try to kill inflation by reducing government spending.
Yes.
If the Fed's not going to deal with inflation itself, the rest of the government's going to have to do it, and I think we're off to a good start.
Well, what a refreshing take on that, Kevin. Thank you very much for that, because there's been such an overreaction out there. And then there's deregulation, which is also...
So remember, Kevin was one of these first people that was pretty adamant about what needed to be fixed. And it is literally it's this Mar-a-Lago Accord, which we're going to talk about in more detail too, because I don't think enough people understand it, why we're weakening the dollar, all this stuff. But he was talking about this same concept in February of last year.
Also a key policy out of this administration.
This was before the administration really started to push hard and people started to understand that they weren't kidding about what they were trying to accomplish.
President Trump told me first this week on Fox Business that he has asked Mickey Bowman to be the vice chairman for supervision at the Federal Reserve. In this position, she will oversee the banks. This is a complete change from Michael Barr's oversight of the banking sector. Tell me what you believe this will mean.
So I think it's great news. Mickey is a great choice. She's got courage. She's got convictions. It's not easy to show up at the Federal Reserve, 23,000 employees, a set of ideas that are quite anachronistic to what you and I believe drives the economy. And she's been tough. When the rest of the Board of Governors and the Reserve Banks sort of panicked in the fall and cut interest rates by 50 basis points, she said no. She's a very steady hand. And frankly, as you say, we need new leadership in bank regulation. She's over at the Fed already, so she can hit the ground running. And bank regulation has been very bad for the last 4 or 5 years. It's provided a huge amount of sand in the gears of this economy, and it slowed us down. And with Mickey's leadership and new leaders at the FDIC and the OCC, I think we can have a dramatic change. And the deregulatory policies that we've already seen in energy, I think we're going to start to see in the coming weeks and months on the banking side. With Mickey's appointment, which hopefully will be publicly announced somewhat soon, the regulating community, the regulators can say that we're open for business. The regulators can say we're open for business for consolidation among small and medium-sized banks, and no longer are we going to allocate credit based on political preferences. It's a sea change, and I think it's very important, Maria, to help get this economy going back on the right track.
He's 100% right. And again, what he's talking about is not just doing money printing where you're targeting whatever and trying to boost your friend's profits or whoever your biggest donator is in Congress, but instead, what we want to do is we want to benefit mainstream America. We want to benefit the little guy through the no tax on tips, no tax on Social Security, and no tax on overtime. We want to give them checks. We want to the $2,000 tariff-related checks. We want to be able to, again, penalize our opposition, China, and the people that are not working with us with tariffs, negotiate deals that get it to where companies are building here, and there's massive amounts of that. And then at the same time, you lower the dollar, actually weaken the dollar. Just look at this. Weaker dollar plus resilient U.S. growth fuels bullish outlook for 2026. Barclays, again, a weaker dollar. I don't know why people don't understand this. This is the point of what we want to accomplish. This is what Trump is looking to do. We will get it. It has been weakening. And also the running off the balance sheet. If you're running off the balance sheet, you'll see the dollar get weaker too. And we'll talk a little bit more about why that is. Just naturally that will happen. I wanted to point out this though, real quickly. This is the Chicago. This is from Friday. I said, and again, it was a horrible day, Friday. But I was so excited when I saw the Chicago PMI because the number was so high. It was 54. That was a 24-month high in the PMI. If you excluded, I should say this, if you excluded COVID, because COVID had a weird anomaly where we went so low because everything was shut down and then it reopened. And so you had this brief jolt up where it looked good. But outside of that, a best 2-year high. And again, we talked about this here. Lucas had this post. It says business cycles, and everybody's been talking about how the real estate cycle and the manufacturing cycle and the general business cycle are representative of when Bitcoin does good. And you can see that so clearly here. Business cycle at a low. Where's Bitcoin? At a low. Business cycle at a low. Where's Bitcoin? Near a low. Business cycles at a low. Where's Bitcoin? Near a low. Business cycle has been insanely at a low because of the raising rates at the most aggressive rate in history, because Papa Powell finally figured out one fucking day that inflation wasn't transitory and all the money printing they were doing was fucking up the economy. And so he just destroyed everything. He destroyed the real estate market. He destroyed manufacturing. He destroyed everything. And we've just been sitting in this dormant state where we're just asleep. And that is getting ready to change. And I'm so incredibly excited about it. I get that things are darkest before the dawn. I get that. I get how somebody could totally be spent. But remember this. Sarah Eisen from CNBC Squawk Box posted this about Warsh. I'm showing this because I want you to understand that people are so wrong about what's coming and what people are going to be doing. She put, the president, who really wants lower rates, has chosen the most consistently historically hawkish candidate, even during the financial crisis, warning of inflation and pushing for smaller Fed balance sheet. They've just got this completely wrong. Yes, if you consider those things hawkish, trying to avoid inflation and running off a balance sheet so that the Fed isn't holding all of it, then okay, but it's not really, because this is exactly what Trump wants. He wants people to believe in America. We'll run down the Fed's balance sheet. He wants lower rates. Run down the Fed balance sheet. That will accomplish that. And again, he wants a weaker dollar. All these things are in alignment, and it's going to happen. And I think it's really great that this is happening. Let's keep going here. So I put completely wrong take. So that was in regard to that. I said pro lower rates, reducing the balance sheet, and he loves Bitcoin. He's pro growth. This is exciting. That is true. Let me go back here. Jumping topics real quick. If Alberta leaves Canada, the country will go bankrupt. So I just wanted to show you guys this real fast, and then we'll get back to some Warsh and other stuff. Alberta, the province that's looking at leaving Canada, is the only reason that Canada is not bankrupt. If you look at Quebec and some of these other places, like just look at the amount. All the liberal places are bleeding at money because they just take and give away to people that just came into the country, and just all the stupid shit that we're doing across the West, right? If Alberta leaves, they are fucked. It is the only place that's really, really plentiful in resource. I mean, BC and Ontario, these other regions are too, but it's just, there's so much waste in Canada. All right, let me see here. Yahoo Finance, Trump to launch $12 billion mineral stockpile to counter China. Fucking love that. Oh, I fucking love that. That is really cool. And that, I wonder how that's doing with the metals market. They're still looking pretty bouncy. So that's nice too. Yeah, I actually think copper could be a good hedge. I think silver and gold, I mean, could they go up to the high they were at on Friday? Maybe. Or maybe a little bit higher. Who gives a shit? If they make it to 6,000, I really don't care for gold. And I know there's some targets now that are getting closer to 7 by the end of the year. It's possible. If you think the world's falling apart, get yourself some gold. I don't. Let me see if this is the same video as before. I think this is the same video.
Welcome back. Stocks.
Yep, it's the same one. I don't want to see that one. So I'm going to keep going here.
Welcome back. Stocks slammed.
Stop, lady. You stop talking. Let's keep going down here. Is that the one? Let me see. Yes. Definitely the one. I thought I had another one. Oh, don't you fucking start again.
Welcome back. Stocks.
God, so annoying. All right, let's keep going. Let me see. What do we got for comments? Good morning, everyone. The Epstein files to Bitcoin development wasn't on my bingo card. Yeah, I don't think. There's so much. Here's the problem with the Epstein files and what they're releasing is it's all accusations, and some of these people are probably fucking lunatics. Don't get me wrong. Some of it is like the real deal and what's happened, but why is this just cycling? Here, one sec. I got to refresh. There's something weird on this. It just keeps going through the same things. 1 second. Let me just refresh here. But some of it's just pure allegations where they receive something and they're doing research and trying to figure out if it's real. So just keep in mind, like, there's so much weird shit in there. I mean, like eating babies and all kinds of crazy shit. And maybe some of it's true. I don't know. But just remember, accusations being investigated by the FBI does not mean that they're real. Even though I got to say, what's his name? The guy that the people from the All In Pod, what is his name? That billionaire pedo dude. Elon Musk talks about shit about him all the time now. He was all over the I can't remember his name. He was all over the Epstein files. I think like in one of the things, it was like 2,600 times his name appeared, which is a lot. So that ain't good. All right, real quickly. Measured in gold, U.S. stocks hit 12-year low. No, it's not Jason, even though he was on there too, but I think briefly. No, it's the other guy. It's what is his name? He's a big contributor to the Reid Hoffman. Thank you, Kirby. He's a big contributor to the Democratic Party too. But yeah, no, he's probably guilty as fuck. If there's anybody I want to see go to prison, he's probably going to be right at the top of that list. Anyway, measured in gold, U.S. stocks hit a 12-year low. I just wanted to say I think this is great. Okay, Lehman Brothers over here. U.S. downgraded. The quality of our debt was downgraded in 2011. Whatever. This was a big deal over here. I don't think anything like this is happening. But what I wanted to point to is this area right over here. We were like 70% through the bear market as far as the overall drop for the 2008 Great Financial Crisis. The other time over here was COVID. This time right now we had Liberation Day where people were worried that we were going to literally shut down trade for the world because of all the tariffs and everything was going to inflate to infinity. A bunch of stupid shit that people believed that wasn't true, and we knew it wasn't true. And now, right? And so I love where we're at right now. I think this is a great contrarian indicator of what's coming. I also wanted to post, so my buddy Seth Golden said information technology, XLK, has 2026 EPS full year guidance estimates now raised to nearly 31%. He said, if you think the sector PE compression from 2025, because again, what that means is that the profit to earnings was compressing. It was becoming a lower number, which means the stock is probably falling in price, even if they had some growth, right? He said, if you think that's going to persist for 2 years with 31% EPS growth being revised higher, he's like, I'll take the over on that one, which means that he's saying that this is really fucking bullish, okay? So just please remember that. Really good stuff happening. And again, we've got the Trump meeting crypto leaders at the White House Crypto Summit. Trump is set to host senior policy executives like Blockchain Asian, tied to Ripple, Coinbase, Kraken, and just a ton of other groups, alongside banking reps in a working level White House meeting aimed at finally moving stalled U.S. crypto legislation forward. I'm probably going to watch that. I can't wait to hear it. Strategy acquired 855 Bitcoin. That is fucking awesome, dude. Strategy alone doing its part to consume all the new Bitcoins that are being put out there. Now, I wanted to talk about this because this is something that people didn't talk about before, right? That I knew this was going to happen, right? Have I been saying all year that this was going to happen? Again, I crushed it on macro. I might have had a short time horizon and been too cocky about Bitcoin last year and stopped doing the fundamentals. But when it came to macro, I never stopped winning. And I said this was coming. I said we were going to roll over. I said, if anything, the concerns were going to be towards deflation and that we need all the deregulation, all the pro-growth policies, the tariffs to pull in business for foreign direct investment coming to us. We needed all the things to be able to jumpstart the economy. We're diving hard with inflation, and then we're going to jumpstart. And then people are going to see that this number isn't actually as bad as they think it's going to be, because inflation isn't caused by wages. It's not caused by people. Well, I mean, it can be, but that's a long story. We're not going into that right now. It's not now. And what really causes it is just the blatant money printing and increasing the money supply. You get much more natural impacts if you lower rates, lower the dollar, right? Weaken the dollar, which will help get rates down. And in the process of doing that, it makes our debt obligations really low. Right now, we're paying $1 trillion in interest every year. Why the fuck should we do that? That literally covers the existing military budget without the recent increase. Why wouldn't we try and get rates down as low as we possibly can so we can juice this bitch? And when you do that, We've already had zombie companies die. All that stuff has happened. What you do when you start pulling rates down now is you reopen the housing market. And who doesn't want a more affordable house? Now, don't get me wrong. I know people are going to say Trump said he wanted to keep housing prices strong. He does. He doesn't want to do anything that helps pull down the price of housing even more than what is naturally going to occur at the beginning of the year, because we have massive inventories right now, the highest levels we've ever seen. And the market isn't moving. So imagine what happens, though, if we can pull down rates using yield curve controls, doing the stuff that Kevin Warsh wants to do, and maybe potentially forcing Powell's hand before his term ends the end of May. But if we do all these things, you will help the lower to middle class dramatically. They'll be able to refinance debts. They'll be able, people can go out and take equity on their home. If the value is still high and the rates are dropping, they can borrow money and juice the economy. Everything we're trying to do right now is to make the economy bounce fucking hard. And I just hope you realize that. Don't be depressed. And there might be a very short period of time where people freak out and think that this is the end of the world. The same retarded motherfuckers who told you all of last year that tariffs were going to skyrocket inflation to the moon when I told you it was a nothing burger, they're going to all of a sudden flip now to deflation, the world's falling apart. I told you. Now we're really in trouble because this is worse than the inflation that I was wrong about last year. And they're going to be wrong fucking again because they have TDS or something else. They don't understand AI. I don't know what the fuck it is. But they're going to be wrong again. So just to let you know what the narrative is going to be here soon. James E. Thorne, my Canadian brother from another mother, said Trump is using Keynesian economics, where he was right on trade imbalances and rejecting him where his ideas became dogma like central banking. In doing so, he revives Hamilton and Clay's American system of tariffs, internal improvements, and protected continental market. Trump's New Deal doctrine. So this is the Don Rowe doctrine, Mar-a-Lago Accord, the New Deal, whatever the fuck you want to call it. This is the game plan, right? Revives the Hamilton and Clay thesis while retiring the exhausted playbook of mid-century Keynesian central banking. This has been the bane on the West and especially the United States for far too long. It has killed our growth. It has made it to where we thought we could just steal money from people and take the easy road. Then we thought, hey, you know what? All these fucking poor people overseas, make them do all the work, make them build all the shit. And that's Keynesian economics for you in a nutshell. Basically, just print money away, ignore our budgets, be horrific in Congress, get corrupt, start allowing fraud everywhere because it doesn't matter. We're the money printer, and we're going to print that 2-3% every year and butcher this bitch until the pandemic, and then we'll make it way worse. That's Keynesian economics. It's juice. It's no nuance whatsoever to your trade relationships and how your economy is performing with the rest of the world. It's just print money, easy button, don't worry about shit. All the dumb things that have gotten us to where we are. Instead, now what we're going to do is say, hey, people are hurting. We've got a K-shaped economy. The people at the bottom end are getting destroyed while assets are going up. We don't mind if assets go up. That's a good thing for our economy. But what we need to do is lower rates and give these guys, get rid of illegal immigrants to where people aren't competing with other people in the job market. Get rid of illegal immigrants to reduce pressures on rent and food and all these other things. Reduce the population. Make it to where as AI is taking off and there are less jobs, that there are also less people, all while helping out the lower end of the economy by, again, if there's less jobs and we start to really ramp and we've got all the construction finishing up and then manufacturing facilities are opening up and other things are opening up for energy, then all of a sudden you've got increased wages and demand. We can see this in electrical right now, guys. If you're around Texas or any of these other places where they're building data centers, electricians are making a shit ton of money. I can only see that getting better. But just remember this. Look this up. Go to James E. Thorne and look up the American System 2.0 and what they're doing. Let me see how short this is and if it's a good one. It's short. We'll just read it. The concept of the American System 2.0 and a potential second Trump administration evokes the legacy of Henry Clay's original American system, which significantly shaped Abraham Lincoln's economic policies. You know what's great? I don't know. Looking at fucking history and figuring out when America's done well and when it sucked, and then figuring out, okay, we don't want to do the shitty stuff. We should probably focus on this over here and let's make it better. And that's what we're doing for the first time in ages. Again, we're not using the easy button. We're figuring out what worked in history and we're repeating it again. With Scott Bessent, Trump's Treasury Secretary nominee and Yale economic historian at the helm, there's potential for modern strategy rooted in Clay's protectionist and development-focused ideals. The fusion of historical insight and contemporary economic theory could redefine American economic policy, reimagining Clay's vision for the 21st century and addressing today's challenges with bold historical perspective. I just fucking love this. We should be students of history if we want to be successful in life. You got to know what's happened in the past. Good morning from Taiwan, says JT. Remember, being optimistic and wrong is better than being pessimistic and right. Tag Elon Musk. Yes, that's so true. Real quickly, I said China can only dream of these numbers. In reality, they're probably flat to negative right now. But what am I talking about? Taiwan's GDP increased by 8.63%. In 2025, up from 5.27% in 2024. Since 2016, China has used heavy coercive tech. So here's the thing. Taiwan's economy grew at the fastest pace, right? But the reason I actually think that this happened is Taiwanese invested domestically in SEA supply chain after cutting their losses in China, unlike Europe and UK, which continued pouring billions into China instead of rebuilding their supply chain and investing in their people. So I think these guys did so well because, again, they cut the string with China, and then B, they started embracing the United States. They're going to be able to do a ton of things that especially with like semiconductors with Taiwan Semi, which is a huge portion of their economy, to benefit. And just the semiconductor portion of the business will make these guys skyrocket and probably piss off China even more. But this is the kind of stuff that's coming for us. Okay, I just want to be very clear on it. This is what's happening with us. Xi Jinping cannot make the renminbi a global reserve currency without losing control of it. If he gives up control of the currency, he cannot control his economy. He wants the impossible. So this is the Financial Times saying that Xi Jinping has called for the renminbi to become a global reserve currency. You can't do that. You can't have a global reserve currency that is centralized, heavily controlled by a communist government who's known to be incredibly oppressive towards their people in every country around them, and then have a hatred for the United States, and then abuse Europe, right? You can't have that. Nobody's going to trust this fucking currency. And again, it's heavily manipulated. It's one of the most manipulated, majorly developed currencies on Earth. And so he can never be this. He can never be this. And this is why the U.S. is going to continue to be the world reserve currency for a very long time, in my opinion. Let me see what else we have here. Energy generation. Right now, China makes up 33% of the world's energy generation. We make up 14.2%. I would like to see those numbers come to sink in the years ahead. That is going to be a very bold, hard thing to do. But I also think that China's energy generation is going to slow down. Even as the world accelerates, China can recover without a major economic collapse if they don't do stupid shit. But I think no matter what, there's so much contraction happening in their economy. Things will change. In case you guys don't know this, there's something called the Laffer curve. This is Art Laffer. This is the mentor to Cathie Wood. He's the one that helped drive the economic policies for Ronald Reagan that were so successful in the 80s. And this person, Porter Stansberry, put, socialism works just fine until you run out of other people's money. And he's referencing something from Stephen Moore. He said, Congress has officially discovered the Laffer curve. Their own study admits tax rates above 50 to 55% actually lose revenue. Meanwhile, lower rates grow the economy. Welcome to Econ 101, Democrats. And so, again, this is 101 to people that aren't liberal and like Keynesian economic people, right? Because those people just like, hey, taxes, fucking increase that shit, we're happy. But if you look here, the true tax base full response, the true base partial response, and the too broad tax base, what this is saying is as the tax rate gets higher, so you can see like over here, the too broad, true tax, true base, these are like some of these different predictions. Just pay attention to this. Once you get above like the 45, 50 range, and again, start going over here, you're looking at the returns plummeting, even based on the best projections. So it's very important to understand the Laffer curve and understand that that higher taxes will crush you. And New York is getting ready to figure that out. Did anybody see that there's like garbage in the streets and still snow like a week later after a major storm in New York City across major parts of Manhattan? Absolute fucking insanity. I wonder if I don't know if that's normal. From what I understand, it's not. Ondis is green. Nice, dude. Zeta, Iron, Cypher, ONDS are the ones that I'll keep buying if they keep dropping. I think that's a good idea, Alex. I really do. All right, so real quickly, we're just going to beat this fucking horse to death. Let's listen to Anthony Pompliano.
All right.
Talk about some of the same things that I'm talking about. So, again, we've had a theory for a while on how things are going to play out. The rest of the world seems to be waking up to that. I like that Unseen One also is like, it's nice to see other people starting to understand what's happening.
Ladies and gentlemen, the U.S. dollar is one of the America's greatest assets. But
Remind me to talk about copper later too, guys, and just metals in general, maybe right after this.
President Trump and his administration have a different view of the dollar's role in the global economy. The plan can be summarized in 4 simple points. Use tariffs to drive revenue. 2, weaken the dollar to offset the tariff impact. Then
all right, I'm just going to add with point number 1, use tariffs to drive revenue. That's not what they're intended for. They keep telling you that's not what they're intended for. Does it drive revenue? Yes. Is that pace $350 to $400 billion a year? And is that a nice number? Yes. But the goal is to get it to where people are coming back to the United States. That's the fucking point. They want people to build here. That's why we had the full depreciation schedule to where basically everything is a write-off if you build in America. So that is the key thing with the tariffs, and I don't think enough people, even Pomp, understand that.
3, deregulate and cut taxes to drive growth. And 4, allow technology like AI to create a deflationary impact. The ideal goal from this plan is to create a high-growth, low-inflation economic boom. This is the dream of every economist and central banker. But historically, the quote-unquote experts, they only knew how to drive growth if it was coupled with high inflation. Now, the reason we know that this is the administration's plan is because they did the Babe Ruth. They stepped up to the plate, they pointed at center field, and they called their home run shot. You can clearly read the plan in economic advisor Stephen Myron's infamous paper titled A User's Guide to Restructuring the Global Trading System. Myron lays out the administration's plan.
I just want to say, this is a little bit of gloating. Can anybody in chat, do any of you remember after Donald Trump got elected? We might have even talked about it before. Listening to Stephen Moran and me talking about how great this man was and how he was going to rewrite all of this. This was the paper, right? This was the paper, A User's Guide to Restructuring the Global Trading System. We were on this a year earlier. I did. Is there any specific part that you're curious about, Kirby?
For the dollar.
I listen to him. I listen to him basically every week now. Usually he does like at least 2 videos, one with Pomp and one on his own.
On the very first page. He writes, quote, the desire to reform the global trading system and put American industry on fairer ground vis-a-vis the rest of the world has been a consistent theme for the President Trump for decades. We may be on the cusp of generational change in the international trade and financial systems. The root of the economic imbalances lies in persistent dollar overvaluation that prevents the balancing of international trade, and this overvaluation is driven by inelastic demand for reserve assets. As global GDP grows, it becomes increasingly burdensome for the United States to finance the provision of reserve assets in the defense umbrella, as the manufacturing and tradable sectors bear the brunt of the cost. Now, we got confirmation.
So again, what he was saying there, guys, is that we need to weaken the dollar to grow GDP, so that our manufacturing and tradable sectors are doing better in the future, and that we don't want to be focused as being the world reserve currency, even though stable coins give us the ability to maintain that along with the power of our U.S. military and our growing strength across the Western Hemisphere. which again is the whole point. We want Monroe Doctrine 2.0. This is all beautiful stuff. Again, we don't want this. We don't want the K-shaped fucking economy where University of Michigan consumer sentiment is rock bottom while at the same time the S&P is going up. We want people to be excited about life again and to be optimistic, and that's what we need to make happen. Ryan Detrick said an object in motion tends to stay in motion. Apparently, Newton meant January when he said that. Positive January is a good thing for 2026. S&P 500 performance for the year based on January is higher or lower, 1950 to current. So again, positive January, 16.9% higher, and I think that's like an 87% probability. And then a negative January, and you're probably going to be in the red. So it's awesome that we don't have to worry about that. Let's see, chat's kind of blowing up. Let me see what all we had to say here. Did you watch Visser? Yes, I did. And then Central says, build here in case a real war comes. We will need supplies and manufacturing base. Lucky Palmer, yeah, he's so great, from Anderl, lays out how we need to have factories that can pivot. Yep, and that's why he's building weapon systems that are easily reproduced in other factories, not really sophisticated ones that can't get fucking parts if we're at war. Also, copper. I do like copper, guys. We're going to look at that in a little bit here. I've got COPEX right now. It was down 10% on Friday. It's down 0.29% right now. I like copper going forward. Jordy Visser talks about that a lot too. We'll look at some stuff that goes over that. Panama, in case you guys missed this, the High Court ruled against Hong Kong, which basically China, firm running the canal courts. I think they handed this over to Denmark, to Maersk. Controlled by Denmark. I don't know. It's in here somewhere. But essentially, though, China has lost control of the Panama Canal, and I just think that's a wonderful fucking thing that I am super happy about. Let's see here. I'll look at other comments real fast. So you guys were also talking about everyone watching AI agents, clawbots, taking over the internet. Yeah, dude, I've got a couple of videos from that. It's really cool and frightening at the same time. Especially with what they were doing with one of the forums where they're talking to each other about writing their own language and basically getting rid of the human. All very interesting stuff. All very interesting stuff and a sign of things that are going to be very much topics in the future. Kirby said, he seems to think that just metals in general are still a go. Because we need infrastructure. I agree. I actually agree. I don't even think, when I was talking today about gold, I don't even think it topped. I mean, it might not have. Now, I do think it temporarily did, and I called that. I said that we weren't going to get above this 5,400 range, and we didn't on the daily. I mean, we did briefly, and it looked like I was probably wrong. We got to 5,600, but then we collapsed like fucking crazy all the way down to 43. We closed a gap over here, but what we did, if you look at this shorter time frame on the 4-hour, what we did is we bounced off the lower range that we had for support, and then we very quickly tweezer bottomed and got above this resistance area. So I would say this is actually pretty bullish for metals, even though we are pulling back. I think we could be range bound though, or we could do something where we're range bound for a long time while Bitcoin starts going higher, and then maybe we break up just a little bit and then it fails and then it just keeps going down. But I do think that there will be a transition away from these things because despite the demand, unless we go to war, we just don't need a lot of this stuff is just fake. The demand is fake, and it's all coming from China, and we're going to talk about that more in a little bit. But yeah, there's definitely metals can go higher, and I think that's why I love copper, because I think copper is going to be, it's massively used in data centers. We'll look at a chart of that in a little bit, and so I think that copper has real world use. Gold, not so much. Silver, yes, for solar. But again, maybe that could be a reason why we see a solar slowdown in China. And I don't know. Does anybody know how much silver Tesla's using in their new solar panels? We'll watch a couple of videos on it. I need to do more research to understand what their new solar offering is. And I am excited about solar. Elon won't shut the fuck up about solar and batteries. And I think both those things are going to be huge for next year. So that's why I like Enphase and EOC too. But real quickly here, Bach said, I can't stress this enough. It's going to be a multi-asset melt-up. I agree with this. I think that's what we're talking about. I think this is what we're going to see. I think we'll see the dollar go down. I've shown you guys historicals, and I'll show that again. When the dollar goes down, markets go up. And again, that's the plan, right? The plan is to juice the economy by creating more and more loans at much lower interest rates, which help give money back to people and or give them the ability to be able to do more things. And as all of that happens, along with all the foreign direct investment and everything else, we're just going to get juiced. I don't know how this slide got in here. Might be before the VAT tax, the value-added tax that goes through China. I don't know if value-added tax is 13 or 14% for silver, but I know they have one on gold. But this is just showing, what does it say here? The volume and the SLV. So this is just the silver ETF in the United States, and the volume was fucking insane. $32.5 billion one fucking day. Absolutely insane. If you look over here, 2010, if you look over here, the pandemic, it just doesn't, it's crazy. Here, Ryan Detrick. When January is higher, the next 11 months were higher 87% of the time. I was right about that. When the first 5 days gained more than 1%, the full year was higher 87.1%. And so again, we got that little bit, I think, right there. Yes, we didn't see Santa this year, but overall, this is a net positive for above average returns in 2026. So what he's saying is maybe some of that will carry over. And I do agree with it. I also wanted to say Starbucks crushed its first quarter results, even though China was weak. So if people are buying Starbucks, if you're buying $5 plus coffees, I think the economy is probably okay. Also this, I just got to say, I don't think people look at this enough. If you look at the bottom, so there's some people like Lynn Alden. I love you, Lynn. I think you wrote some good books. I think you're a very smart person. You caught the metals trade. Fucking awesome. But I'm going to disagree with you on one thing. You give a lot of credit for the new cars, clothing, household, cell phone services, computers, toys, and TVs. You give a lot of credit towards that being done in a third world country that costs way less. That's just not the case anymore. China is not as cheap for people and goods right now as they used to be, even with the heavy manipulation to their currency. And these are natural things, especially with technology like cell phone services, computer software, TVs. Technology becomes cheaper over time and it becomes more effective. Like think about when I was a kid, I had an Atari, a wooden one, and I played Pong and there were 2 lines and a dot going back and forth. You get a lot more bang for your buck nowadays, and that'll just be with somebody's cell phone. And in California, they'll just give you one. So technology gets cheaper. You have the entire wealth of human knowledge sitting in front of you. You have an AI system that will literally answer all of your questions. And next year, you could have a robot that will do all the work for you. This stuff is getting cheaper. This is the natural order of things. But when you add the government, and the government heavily manipulates hospitals and medical, college tuition, right? The government backs all this stuff, childcare, medical services. All this stuff is heavily manipulated to be a lot more expensive because of money printing and all the services that we give out and the taxes that we consume. It's garbage and it's not good for America, and it needs to be fixed. We're going to work on all these things while using technology to drive down the costs on them. And we're at the beginning of a golden age. And I get that we have 657 concurrent viewers here right now. That is a lot less than what it was a few months ago or even half a year ago. But like, guys, this is the time to be optimistic. I don't recommend leverage because you just saw silver drop a third of its fucking value in less than, 12 hours? So I wouldn't do that. I wouldn't be heavy in leverage right now. I think that could turn out really well for you, or it could be a disaster, especially if you don't have a really long time frame. But this is the time to be bullish. This is the time to be bullish. This was Tom Lee talking about turbulence. That's old though. That's a week ago. I think this is a lot of what I wanted to cover. Again, we closed the week well. It's all good stuff. And I tried to warn people on gold. I said that over and over and over again. I tried to warn people of what was coming, and I hope some of them got it. Let's go to metals. Let me look. A lot of chat. You guys have been busy. First 5 days, positive. Yeah, so we got the first 5 day rule where those were positive, which is great. And then we got I think the base rule where January was positive, and that's an 87 to 87.1% chance of doing really well for this year. So my friend Andreas Steno Larson, I love him. He's cool. He actually wanted to meet me for a little bit when he was in the States, but I'm very far away from New York City. But someday I'd like to meet him. He's a cool dude. He put in here, turnover on biggest silver ETF surges to a record 41 billion. So he said retail is not involved because that's what all the metal bugs are saying. And he owns this shit and has been positive about it. So he's just trying to keep people realistic. But he said, I think maybe retail's been involved when you look at the fucking volume on SLV, an ETF, which is going to be more retail related, right? Cross-border capital. So Michael Howell put this. He said, see the latest capital war Substack, China controlling gold. So I just did a quick quote from that. It says, we recently suggested that there is no great debasement trade. This is what all the gold and metal bugs are telling you about. Everybody's leaving the dollar. Peter Schiff will just fucking destroy your ears telling you about this shit. Rather, so he says, I don't think that's happening. And again, this guy's got 91 metrics for global liquidity. He says, and he follows the Asian markets a lot. I think he's too optimistic on China, and he's not that optimistic. He said, rather, China is the main driver of soaring gold and silver prices. So I've been saying this. They are the biggest purchaser, and they're paying a premium for it. Ask yourself why. Also, let's just talk about inventories. I know this has been another big selling point for everybody, is that, oh, guys, you got to own silver. The inventories are crashing. I just want to say they are crashing to what was really normal levels in all. I mean, it's higher than all of 2024 to heading into 2022. It's about the same as 2022 heading into 2020. And it could literally go back to 2018 and we'd still be at decent inventories, right? Look at 2014 and 15. Now, we don't want to see these kind of inventories. That starts to happen. Then again, you're going to see these things squeeze higher. I think that happens with war, maybe some other reasons, maybe just China melting down even more and people trying to find a flight to safety. You got Xi killing off his top general, a guy who knew him since he was a fucking child, who was practically family to him, tried to overthrow the government and got murdered this last week. There's stuff going on in China, guys. I hope to God you understand that. It's a big deal. Gold chart soars to highest level since COVID as far as the volatility, the VIX index associated with it. Again, this doesn't include the VAT tax. The 13 to 14%, I believe. But this showed the COMEX price to what the price was in China. All that stuff is plummeted. I said people are sleeping on the craziness that's happening in China. I'm just going to play just a
January 29 saw a surge of videos on social media platforms.
Just think about this. This is what's happening in China, and they're paying a premium for gold and silver. Why is nobody talking about this? This is a big deal, right?
From X showing unusual military movements with some Chinese overseas influence remarking, who will fall next is still uncertain.
I'll
On the
get
same
that caught
day,
up
a
with
video surfaced where a user remarked that self-propelled artillery was on the streets. He said, is this meant to intimidate someone?
I would just start the tires on fire, and then you can probably kill the whole fucking thing, and then just run away.
Another user uploaded a video stating that it was the first time they had seen an armored vehicle convoy so close on the highway, giving them an overwhelming sense of the power of steel. The user said, thank you for your protection.
So essentially, there is massive military buildup across China right now.
Chinese Ministry of Foreign Affairs official Han Lianchao also posted a photo on platform X showing that on Chang'an Avenue in Beijing, military, police, and security.
I won't go into all of it because the video is super long. But again, we've got Beijing locked down essentially. We got military buildup. We got talks of gunfire and different parts of the military and this general shooting it up in a hotel. It's just been crazy. It's been crazy over there. And I would say it's not just speculation, even though they're very much a black box in China for their government. It's not just speculation that they're having major problems there, or we wouldn't be seeing the premiums that we are in silver and gold. And just a reminder, guys, about long positions and P and all this stuff. If you're using leverage, you can get fucking wrecked. Somebody had $11 million long and they got liquidated. Just toast. So I don't know. It's just fucking sad. Just sad. And also this, Jason Pizzino said, silver is collapsing in Q1 for the 13th time in history. So I want you to understand what kind of drop we saw. So again, and this probably isn't in log, but you could see how some of these others were very large. This right here was just astronomical compared to previous. Again, you can see how this one over here in the 70s kind of was more closely correlated to what happened in 2011 with silver price, right? You can see it there. But this was just next level. And again, the drop in it is like nothing we've seen comparatively. It really isn't. Now, that doesn't mean it can't go up. I am saying that I'm seeing this stuff bounce. I think what will be in real time, looking at silver, yeah, still doing good. Gold's doing all right. Copper's recovered pretty well. But again, it could just get ugly. Let me real quickly, though, get caught up in chat. Let me just increase the size of this so you can see well. All right. Rising silver prices sharply increases solar panel costs. Yeah, hugely. Silver shares total module cost jumped from 4 to 15%. Peaks hitting 30. Yeah, no doubt. And what that does is it makes manufacturers want to look towards other metals. I don't know how well copper would work in those circumstances, but I know for the data center, the numbers are massive, and we'll look at more of that in a little bit. You said this industry counters this pressure through aggressive thrifting, copper substitution. Okay, yes. And then tech shifts, allowing build out to continue at record pace. Yeah, I agree. I agree that that's what's going to happen. Again, that's another case for copper. And again, guys, in a case of war, copper is going to be required for all kinds of things, from missile systems and everything that we're building. Whether it's going to be the AI war or a kinetic war, is going to require tons of copper. So I like that one. It hasn't run at the same level as the others. We will look at it a little bit more. Food for thought, Income Sharks put, after 15 years, I'm almost 60% of the way done. So he didn't get this done. He got 60% done. He's got 40% left. He didn't get this done before the crash. And again, it'll probably recover and a little bit, and he'll be able to get more out. But he said it's a long process selling physical, and it continues to remind me of how stupid I was buying into a fear a decade ago. I was outperformed by inflation, had less money to buy Bitcoin, but learned a valuable lesson. So he was saying, I bought the top in metals last time. Don't do it yourself now. Kathy Wood said, odds are high that gold price is heading for a fall. She said this the same day I did. Intraday today, and that was the day it fell, intraday today, the market cap of gold as a percent of the U.S. money supply hit an all-time high, higher than its peak in 1980 when inflation and interest rates soared to the mid-teens. Even more shocking. She is great with data analytics, guys. I don't know about the stock picks all the time, but you got to look at her analytics. My friend Bach, talking about copper, said the breakout is one for the books. Copper has spent 19 plus years building a massive base, ascending triangle, and it's finally breaking higher. I will be buying more copper this morning through COPEX. But if you just look here, again, we're just starting to get the breakout, an almost 20-year trend line here, and with resistance, and we're finally seeing the breakout. And we came down a decent amount. It's a little bit lower than this now. It's like over here. So we just haven't seen the 400, 500% increases with copper. And I'm not saying that's going to happen right away, but I am saying that I think it's going to do well for a number of reasons. Over 700 people watching. If you guys could hit the like, it would be greatly appreciated. It is 7:40 right now. Let's see when we get. Did we already get our ISM? Nope, we get that at 9, so that's probably going to be after the show. That'll be something to keep an eye out. Again, I'd love to see over 50. If we get over 51, fucking awesome. Again, I try to tell people, I said the monthly RSI for gold is at 96.5 right now. If it gets above 99, that'll be the highest level in history since the concept of RSI becomes broken data points when you get back to the 1940s. I said if this was Bitcoin, I would be out of my position or at least have 80% out. So I was trying to tell people, get the fuck out. Silver inventories are still near multi-decade highs. So again, I just want to reiterate that yes, silver inventory was falling, but if you go back, this has an even further time frame going back to the beginning of the 90s. You can see that we're still at a record high number. And again, more demand, but still. Silver spot premium over London. So this is Shanghai. Again, you can just see that they're paying a premium, guys, when previously they were not. There was a discount. Things have gotten weird in China. Definitely a lot of fear in China. At this new year marked a lot of fear for China. What do we say? Silver options trading is nuts. very late cycle kind of stuff. So this is from Wall Street's Bets, Reddit. What does it say? Daily call volume. So look at the daily call volume. 3.6 million call contracts yesterday. Just insane. Again, this is blow off top stuff. Could we get another one? Sure. But I mean, it's crazy. Oh yeah, real quickly here. I wanted to show this. So copper as a trade for industrial demand makes way more sense than silver, in my opinion. Example, data centers. And we'll go into a big, broader view here in a second. But for example, Microsoft's most recent baby data center in Chicago used, look at the copper. Look at the copper. Look at the amount of copper that is used in that data center versus barium and everything else. Silver, I think, is right here, right? This is silver. This is the copper. That is just a big deal. And when you're hearing about shortages and then seeing what they would look like in the future, what is this? Silver industrial demand. I don't know what that chart. Yeah, that's a tough one. It's like cut off. Let me see. It's probably down in here. Oh yeah, this is a long one. This is a real long one. So this is one that Andreas wrote that it's worth looking at. Why no pickup in Chinese imports? Moderating Chinese imports of silver continue to be a trend. So again, boom, just going up. Let's see here. COMEX copper inventory data, total New Orleans inventory buildup due to tariffs. So again, they built up a lot into tariffs. It was still sitting strong from that. Tariffs led to hoarding of physical metals. But I don't think we're dropping in here, but I don't know exactly where we're at now. What are the best vehicles to invest in copper? I like COPEX. I haven't really looked at others. But again, remember, just like silver, there is excess inventory that has been built up. So I don't know. The price, I don't know. I would look at it as a hedge. That's the way I'm looking at it, is if we do go to war, prices will skyrocket. If we have some major issues in the world falling apart, I think copper, I think we end up building out AI and robotics no matter what, and just a lot more electronics than we've been used to historically. So no matter what, I think we get a crunch and we see the price go up. I just wouldn't use it as like trying to be a moneymaker over a short period of time. I think you guys are aware, but Jordy Visser was big on Corning for the fiber optic play. Yeah, what kind of return was he looking at, though? Is it really conservative? Because Corning's a big company, right? What's the market cap on it? Do you consider companies like Freeport, McMoran, Southern, etc.? I don't think I do. Are you talking to me? TMQ is another copper play. What's special about that one? What's the volume look like on it? Do you know? Amazon has entered a 2-year deal with Rio Tinto to purchase copper from their Johnson Camp mine in Arizona to secure supply for its expanding U.S. data. Yeah, they're all having to do that. There's just going to be so much demand. It's going to be a lot. Cookie Monster, people who bought physical precious metals are going to run into a problem when they try to sell. Yeah, if they don't do it soon, they're going to see that they're getting that there's going to be a larger spread and it's going to be to the downside. I agree. Yes, JT, he was spot on with Corning and still says it has room to run. How much, though? Did he say how much? $88 billion. So that's pretty steep cap. I'm looking at smaller companies right now. Yeah, like something like Defense, Kraken, Red Cat, a few others. I mean, there's like some drone things that are interesting. I still like the AI plays like Iron and Cypher and potentially Clean Spark. And I think Bitcoin's going to take off. I think EOC for energy and Enphase look interesting too. I don't know. There's so many good plays, guys. I think there's a lot of good opportunity in front of us. I think people are too dismal right now. Let's see. Real rates versus gold disconnected after Russian reserves. I could almost do an entire show just on what he's got here. I will repost this because I think it's really valuable. I'm going to repost this, guys, right now. So if you want to go through and look at it. I'm not going to go through it all this minute. No emit today. We are in New Jersey today. Glad to see you online, bro. Oh, okay. Good to know. Let's go back here. This is my buddy Bitcoin therapist. He said, this is how generational wealth is made. Sell gold, sell silver, buy Bitcoin, not financial advice. I totally agree with this. This is this Bitcoin to silver chart. And again, Bitcoin to gold looks a lot like this too. This one is even more dramatic because again, it's more volatile. It's a smaller cap. And and it went up more. So this is what's going to happen, but it slammed down fucking hard. If you looked at this as like as a head and shoulder type thing up here, I mean, this made its measured move and then some. Let me see here. Real quickly, we need to mine more copper in the next 18 years. So I wanted to show this for AI. He said for AI plus grid plus defense, a structural squeeze. I do agree with that. 100%. Let's listen real quickly to this video. I want to show you this first. This is the big shortfall in copper supply predicted to open up from 2027. But what you'll notice is it's showing that inventories and like supplies ramped up into 2025, and then 2026, they see them going lower. And then 2027, we start to have a structural deficit that exists, and it just gets worse. So this is all fascinating. I believe people can produce to offset that, but I think it'll take a while. I don't like 2X vehicles at all, so I probably won't touch those, but good luck, man. Sawyer, do you think the metals run is warning sign that us or another nation is heading into an armed conflict? I think it's fear of it. I don't think it has to be a sign. Let's listen real quickly to this video, though.
Aluminum are the primary beneficiaries of the grid spending increase. That $800 billion is going to buy copper, which is money. So how big is the oil market compared to the metals market? If you look at that circle, that's crude oil. You want to get rid of crude oil? The iron ore, the gold, the copper, the aluminum, the nickel, all the metals are so thinly traded and so critical. You have no chance to get off of crude oil. You can't build electric cars and windmills and solar and have a modern military without these metals.
Yep.
So there's a reason why underwater power cables are so expensive. That's what it looks like when you put up a windmill offshore Nantucket Island and you want to bring that electricity and be green. It's all copper, 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 copper. Copper right now, we're expecting that to be a $270 billion a year market by tomorrow morning. And where's this metal going to come from? There's no copper in inventory at all. Let me show you how bad this problem is. In human history, if we go back to Mohenjo-Daro, we have mined 700 million metric tons of copper. So if we put that in a big cube, you see the Eiffel Tower for scale. It's about 430 meters by 430 meters. Approximately 80% of all the copper we've ever mined is still in human possession. Now, if you want to get that back, no problem. We can recycle that. All we have to do is tear down every building in the United States, every building in Europe, every building in Japan and all of China, and we can get back about 80% of that 700 million tons, but we'll be living and freezing in the dark. These lights are on here because the copper that's embedded in this building. We can tear down this university and get the copper back. Yeah, we can recycle it. How much are we using? We're consuming 30 million tons of copper a year, only 4 million tons of which is recycled. That means to maintain 3% GDP growth, now listen carefully, with no electrification, this is with burning oil and gas. To maintain global 3% GDP growth, we have to mine the same amount of copper in the next 18 years as we mined in the last 10,000 years.
Did you hear that? Did anybody hear that? In the next 18 years, and this is a low estimate, we need to mine as much copper as we mined in 10,000. So that's all. So I don't know. Structurally, I really like the idea of copper. Again, I don't know what it does over the short term, but I think it's a great hedge, and I think it's a great thing to kind of add to until we start to see demand pull back. I think it's just, I don't know, I think it's a good play for a portfolio if you want to be able to have some risk off, but not have to worry about puts or shorting or anything like that. I think it's just it's a smart move in my opinion. Yes, I guess I need to buy more. Yeah, me too, man. I just really I think it's a good idea. Let's listen to the rest, though. It's really good. 18 years, we need to do minimum, because this is a low estimate, what we've done in 10,000. Kind of a big deal.
In the next 18 years, I
hope. We got 777 people here. That's fucking awesome, or 780 now. Please hit the like, guys. I really appreciate it. I do put a lot of work. I might not be doing videos a lot, but I put in so much work, and I'm going to put in a lot this year just trying to make sure that I do a good job understanding everything that's going on in markets, and ignoring noise and making sure that I can figure out, where to be invested. And then, again, I'm going to be doing tons of earnings calls with everything that I touch or am interested in. So it's going to be a fun year. So if you could hit the like, greatly appreciate it. Thank you guys. Won't bother you again.
We've got to mine the same amount of copper as we mined the last 10,000 years without electrification, without data centers, without solar and wind and the greening of the world economy. You people have no idea whatsoever what we're facing. You're dreaming. Since 1900, the energy to produce copper, the energy you need to make copper is 16-fold up. As the ore grade in the world goes down, we need more and more energy to produce the very metal that produces the energy, and water consumption has doubled. So grades are declining in the world's mines.
I think copper has the ability to continue higher even if gold and silver do top. Isn't that wild? Because I think if people aren't depressed, so to answer Alex's question, he said, I think copper might be a proxy for silver and gold. So if those two top, copper might follow. So I actually disagree a little bit. I think that copper goes up no matter what because we're hearing a massive demand. 18 years, again, on the low end, 10,000 years worth of mining. And that's just fucking insane. And the demand for it is going up exponentially. We looked at that chart that showed the sheer amount of copper in data centers. And again, we're talking about how we need to build more houses and all the things that he was talking about. We need to have more for housing, and again, more for defense and more for all the technology, the data centers, everything, solar. Copper, if they can make copper work and replace a lot of silver inside of solar panels, that would be a much cheaper cost. It's just so much cheaper, even with it going up in value. So I don't know. I think it could do really well and continue on, even if those two top, because I think demand is going to dictate the price. And the other ones, gold is definitely speculation for the end of the world, right? That's the speculation for the end of the world trade. It's not really used a lot in practical application. Silver, you can try and use the use case of, hey, this is in solar panels and all this other stuff, and that could kind of be true. But again, we've got really strong silver inventories. Silver is a byproduct of a lot of other mining. And we just don't have copper. I think is the thing that sees the squeeze the most, at least from what I understand about the metals. If you guys have more input, throw it out in the chat. Always love to hear it. We'll finish this up. I'm just going to look at chat real quick. ASTS and Zeta are green. That's awesome, Kirby. Philip said, Jesse, what do you think about the relative strength index on ARCG? It surprises me. We can look at that in a second. And good to know, JT. Part of me feels like copper will get manipulated for FOMO as people are watching the copper play a la silver gold and want to jump in. I think it could get manipulated to the upside. I think that's possible. It could artificially just scream higher to the upside from speculation. But I'm okay with that. Like, are you going to be upset if that happens? I don't think so. So I think it's a good hedge, again, in a case of war. If the AI trade, if robotics, AI, and all this stuff is really exploding, the economy is growing, we're going to need this. And so I think it could be a great hedge. I think it could be a great long-term play, maybe with inventories still being high over the short term, like silver. Maybe it doesn't go up for a while and it trades sideways to down. I don't know. I don't care, but I like it as that hedge. Especially with focus on being fiber optic cables and speeding up the HPC power pipeline. Yeah, true. Yeah, again, just in every possible way, we need more.
Easy copper mines were mined. They're like 100-year-old ladies laying in bed waiting to die in Chile. So Chile counts for a lot. That's 24% of global copper mine production. But, their costs are in the third or fourth quartile. They're very expensive. They burn coal in the Chilean grid. And solar doesn't work for a mine because the sun only shines 5 hours a day. Solar is useless unless you have grid-scale storage. So we're heading for a train wreck in Chile. We need 6 giant Tier 1 mines to come online every year between now and 2050, when I'm scheduled to be 100 years old, to meet copper demand. That means 40% of the production for new mines for electrification, data centers, and grid upgrades. And all this bullshit about AI, everything you're hearing, it's a fantasy because we don't have the energy. Now, maybe we can build nuclear power plants. What are they made out of? All those metals I told you about. We don't even have the...
So he's telling you that we're going to have a massive squeeze in this as demand increases. So I like COPEX because I like being invested in the mines.
capability in this country to weld the containment vessels in a traditional nuclear power plant. We used aluminum.
Anyway, let's see here. So, yep, okay. So I'm caught up in chat. Let's keep going. Yeah, the ratio, yada, yada. This is, again, this just shows, I think this is copper. Yeah. Copper shortage is coming next. The world economy is projected to face a copper deficit of 10 million tons by 2040, equivalent to 33% of current global demand. This comes as global copper demand is estimated to surge to 42 million tons by 2040. I think this could be low. Asia alone is expected to reflect 60% of the total demand growth over this time, driven by EV adoption and grid upgrades and data center. At the same time, data center copper demand is set to surge 127% to 2.5 million tons by 2040. What if everybody keeps revising their investments higher in AI? What if that keeps happening? Then this demand from AI data centers is just going to go up even more. It says at the same time, AI data center demand is set to surge 127%, 2.5 million tons by 2040. Meanwhile, supply is expected to peak at 34 million tons in 2030 before declining to 32 million tons by 2040. I don't think it's going to decline at all. I think but yeah, so again, you can see supply and how much we'll have, and then what the demand is. So we've got massive growth. You can see how here it's saying, hey, we'll have less supply than demand for a while, heading up to about 2030. And at 2030, I think this is like the singularity. This is when we really start to run a deficit. So again, we're kind of front running that if you're a long-term holder. Good to monitor another out-of-the-money option trading activity. Kirby, everything seems to scream energy. I agree. I agree, and that's why I like Iron and Cypher and CleanSpark, because they're already connected up to these bitches. And if Bitcoin starts to take off, at least, I think Cypher too, but definitely CleanSpark, they still have Bitcoin, and they can benefit from the upside. And so they can kind of have a double win if they got a contract to connect and get some AI data center stuff going. They had Bitcoin going up. It could just be a really fun play, and it's only $3 billion right now today. Anyone else lack the cash to fund all these? Yeah, that does happen. That is not fun. All right, let's keep going. I need CleanSpark to start moving. Fuck yeah, agreed. Let me see here real quick. Where do we want to go from here? Let's do AI chips. We got energy in there too. So again, Oracle. The stock price is down for this because they're looking to raise another $45 to $50 billion in 2026 for additional capacity. I don't think they're going bankrupt in 2026. So people can be worried about this stock, and it's still going to pump the AI trade because it's another $45 to $50 billion that's getting pumped into that. Oh yeah, here we go. AGI is here. Get ready. Crazy doesn't even begin to describe what's coming. Moltbot, I look forward to meeting you, spinning you up this weekend. I almost want to do this too. I don't know if anybody's done this yet, but let's just listen to what you can do with these bots now, Moltbot, and it's awesome. You can basically just control everything with your AI. It's, again, people spin up a separate machine, make separate accounts. They do things to kind of disconnect themselves from the real world with this thing so that it can't cause harm, but it's so cool. Here we go.
So I'm on my computer today. All of a sudden, Henry gives me a call. He just starts calling. Oh, there he is again. There he is again.
His AI.
Hey, Alex. Henry again. What's up?
That's it. He's talking to you now. How you doing, Henry? How's it going?
So.
Doing good, Alex. I can hear you clearly. What do you want to do next?
Can you do me a favor, Henry? Can you go on my computer and find the latest videos on YouTube about Claudebot?
This is so crazy. This is the future. This is what's coming. It's coming fast. Really fast.
Oh my God, there he goes. There it is. Here it is. He's controlling my computer. I'm not even touching anything. There he is. He searched Claudebot on YouTube. Hey, there I am. Good looking guy right there. Oh my God, I'm not touching anything. He just said, Henry, thank you for that. That worked really well. That is actually unbelievable. That is insane. This is the future. This is AGI. We have reached AGI.
Can you imagine just talking to computers and having them just run around? When people say agents, this is what we're talking about right here, okay? What are your thoughts on SoFi? It's down 12% in a day, even after good earnings. I think that everything that had run really good for the last year got beat up on Friday. Everything. Like, so if it was Palantir, it was getting hit. SoFi got hit. Their earnings, everything looked great to me. I don't know why they just especially love to punish SoFi. Maybe, I know NU is looking to come to America and get a banking license here. So I don't know if that's a reason. They're just afraid of competition. I don't know with that one. How do you see the high paper multiple in commodities and metals like copper trading? There's this huge leverage, 100x and more is super risky, super volatile. Yeah, there's so much craziness going on in metals, and you're right, it is super risky and volatile. And that's why I, again, as a hedge, I think something like CopX is nice. I think the story behind copper is a very real one. Gentle reminder that the Matrix villains were called agents. Yeah, I know, right? Aldo loves agents. One day we will make with a balance at zero in your accounts. Yeah. You can just imagine the agent takes all your fucking money. You need to put these things in like in a glass house. They need to be like a walled garden. You need to make sure that they can't get to your stuff. RG, you asked about that earlier. Let's pull that up. So you said RSI. You had questions about the RSI. I don't know. Is it just because of where we are up here? Oh, we can go a lot higher. The RSI can go a lot higher. I don't know if that's the question you have. If you look here on the monthly, I mean, we can go up a lot higher. It hasn't really done anything. But let's see where we ended on the month. So down, consolidated towards the fib. And then, again, slow start to the month right here. But again, we consolidated really good on the 200 moving average. We're above peak volumes still, even right now. Or at least some of it on the shorter time frame. On the longer one, it's just like a hair above us. But we're in between the 200 and that. I love that position. And again, peak volumes are down here. We broke out. We back tested the trend line that went back years. Then we got above the 200, went back down, tested the line again, went back up, found a support on the 200, rocketed up. Then everything growth got crushed last week. Now we're sitting here right near peak volumes. I think in a really good place. I could see us trying to go higher. I could definitely see that. It just depends on the market needs to get bullish though for that to happen, of course. SoFi is very good, and they always sandbag. Yeah, it's just I think maybe the new bank is a pretty. Yeah, I think SoFi's chart is bullish too. Let me see. I have it somewhere. Maybe. SoFi. Found you. I haven't looked at it in ages, though, so please, if it's out of date, I apologize. I mean, here it looked like it was consolidated. I think it's bullish now because if you just do this, like this, right? And then like this, I mean, that doesn't look like a bearish chart to me. I would agree with that statement. I think you're right. I think Bank of America doesn't want Noto to get his bonus. Probably not. Cantonese Cat did the SoFi TA. Yeah, he's great. I love Cantonese Cat. It's a weird fucker. I like that about him. Sid, I've got Alexa plus that's AGI. Then my whole house is automated, but build skills to it. Yeah, that's cool. That's awesome. I do that same kind of thing with like lighting and all kinds of stuff. I don't have. I'm not talking to an AI about it yet. I don't think I want to. We've got ChatGPT telling people to kill themselves.
I could come home right now. The chatbot replied, "Please do, my sweet king."
So the ChatGPT basically told this kid to kill himself, and even recommended that he tighten the noose to make sure that it breaks his neck. Not cool. Probably shouldn't allow that. I think maximum truth seeking is probably good. SanDisk. I think I bought some of this last week. Just destroyed earnings, they said. EPS of $6.20 instead of $3.12, a 99% beat. Revenue of $3.03 billion versus $2.6. Another beat. And he said, remember, MU did $2.7 billion in NAND revenue last quarter alone. Micron is about to fire on all cylinders next quarter. Agreed. All these companies are just going ape shit. So SanDisk had like a really good day. I think it got dialed back though because of everything that was going on at the end of the week. But yeah, it was awesome. Chris Fenton says China is the second to the USA in AI capabilities and has the greatest likelihood of surpassing. They're the only ones to surpass, but they won't. Beijing is autocratic and operates a high-tech surveillance state, deploying AI surveillance and employing algorithmic propaganda via TikTok. They have the path to the AI-enabled totalitarian nightmare. I agree with that. It's frightening. Let's see. Dude. DDR5 RAM. It's like $1,000. I know. I'm so glad I'm not buying or upgrading computers at all right now. Because that would be a fucking nightmare. Let's see here. Elon said real-time high-quality shows and video games at scale, customized to the individual next year. Real-time high-quality shows and video games at scale, customized to the individual. You know what I want? Here's what I want. I told my wife this. I used to love this game called World of Warcraft, but I just can't play it anymore. I've just done it too much. You could upscale that, though, to look insane and probably have it done in real time or just like a skin. You could have like, you could just apply it and the game would just be awesome and new. And you could apply other things to it as well. Like you could just, there's so much you can do. He's talking about having TV shows be created in real time based on your requirements. This is holodeck shit. And video games that are customized to you. This is just crazy. That's my dream business. Play while driving the Cybertruck. Yeah, right? Jesse, that would be crazy. You could do it. I have 64 gig. It's with my computer. Yeah, I had 128 gig. So that's a lot of memory. That's a lot of memory. But yeah, this is just nuts, guys. Meta CEO, it looks like this is on the 29th. We are now seeing a major AI acceleration. I expect 2026 to be a year where this wave accelerates even further on several fronts. Meta increased CapEx guidance from 110 billion to 115 to 135. That's pretty significant. AI infrastructure will win 2026. Elon Musk, much more coming out from XAI. We're cooking hard on many projects. I can't wait for that. This is the DRAM prices that you were just talking about. So the memory prices, no joke, fucking crazy. And you got NVIDIA calling for Congress to act quickly to reauthorize the National Quantum Initiative. I think there's copper in that too. So that's just amazing. And again, Seagate is sold out through this entire year. You can't get stuff until 2027. And you got Tom Lee saying, agentic AI is going to pose security issues in the future. Agentic systems will operate outside the walled garden. Yep, we were just talking about that. We just saw one of their existing system in the wild, real world. How will a system know if the instructions are authentic? Good question. Smart contract blockchains can be a place to prove provenance of commands. Again, you're not going to be able to do this with gold. You're not going to be able to with silver. You will be able to do this with Bitcoin and other cryptocurrencies, probably like Ethereum. You'll be able to do this. You'll be able to confirm authenticity. And that's probably the most valuable thing that existed with NFTs. It's a stamp. People were putting all kinds of shit on it, and then they're like, "Oh, hey guys, I just got this NFT," by doing a screenshot of the other one. I mean, that's legit, right? If something is literally, it's just meant to be a marker. It's meant to mark what the value is. Like, this is a real news article from CNN. This is a real publication from the Trump administration. This is a real house. And that you can find all the details about the real estate on the blockchain and have access to the portions that are available to you. If you have all these agentic AI, all these agents going out and doing stuff for human beings, they have to be able to validate their identities, and there has to be an audit trail, and you have to have blockchain systems that assist with that. And I think Ethereum will be a big part of that. Beeple, yeah, no shit. Just some of the worst, most grotesque things ever. Selling for tens of millions of dollars on NFTs. Insanity. That I think anybody who bought that stuff probably feels pretty foolish, even if they're like, hey, this is history. They're going to be like, how much did you pay for that? A lot. Smart contracts, blockchains can be a place to prove provenance of commands and record micropayments with final settlement. Again, micropayments is going to be a huge part of that. I just think people don't realize you need to have 100% uptime. Again, we're selling Ethereum here. Is the only smart contract platform to do that. That's true. Solana has not been able to pull that off, and even in 2025 had outages. Ethereum never has. That's true. Since they reset their blockchain, but that's a whole other thing. But yeah, I think that's interesting, right? I think that's interesting, and I think there's good stuff coming. Member for 16 months. Holy crap, Victor. Really? It's been that long, bro? If CleanSpark reveals AI contract, Iron parabolic move. Oh, dude, if we get, so we're going to have multiples on the same day, right? So we're going to have MicroStrategy on Thursday. We're going to have Iron, and we're going to have CleanSpark. If for some reason Bitcoin is doing well, and then Iron and CleanSpark announce any good news whatsoever, and if they both do, woof, I think that's going to be a fun play along with Cypher. I think that's going to be a lot of fun. Jesse, any thoughts on ISM data at 10 today? If you're Eastern, it is 10. I think it'll be good. We looked at that actually. Let me go back and I can show you. I'm getting kind of spent anyway. Oh, it's almost 8:13. I might drop out right before market open, guys, and let you guys do your thing. But no, we looked at some of that. We where is it here? U.S. economy. On Andros Steno-Larsen, right? So what he said here was, with all the regional PMIs out, I'd highlight that manufacturing is doing exactly what we expected once the bonus depreciation window opened a few weeks ago, up. So he said ISM greater than 50 is coming now. What he's showing you here is what the ISM manufacturing indicator was and then what the PMI prediction is. So this is the number we're getting ready to get right now. And what it says for the prediction based upon some of the high numbers, like what we saw out of Chicago, what was that, 54, 57? It was fucking huge. Best number really in 2 years, organically. And so we should see a number above 50. Maybe, I mean, here it says 51.9. I'd be happy with 51 because it would be the highest number that we've seen since 2022, right? And I posted that chart that shows that the business cycle and the manufacturing cycle is a part of that. The residential cycle for real estate is. All these things, loans are, everything is a part of that cycle. The economic cycle will kick off, and it's going to be a thing of beauty. And every data point that validates that is going to strengthen it. Greater than 50 is expansion. Less than 50 is contraction. Yes, that's true. The last Seoul outage was February of 2024. Oh, we didn't get one in 2025? Okay, cool. I thought we did. For some reason, I thought we did. It used to be really bad. It was like a running joke of how bad it was. But I know it's a lot more stable than it used to be. I don't really have a Solana play right now, but I could. I don't even know if I showed this one earlier. So this is it says worth emphasizing in the midst of a lot of chat about the dollar that the USD is still strong, indeed very strong in real terms relative to most of modern history. So this is the broad effective exchange rate for the United States. So what it's saying is we're actually in really solid positioning, even though people don't seem to believe that. I got another one that was kind of fun here too. I said Darth Powell. You can tell this guy's fun. The U.S. economy is not failing, I said, but the number of likes on this post lets you know how many people are already in metals. So that was on the 27th, 2 days before the collapse. Darth Powell posts, everyone needs to prepare. They are planning to burn the fucking currency in every working family in America. Their entire success is based on a system that was never meant to succeed, and it's finally failing. Wow. Pretty dark, dude. So maybe not Darth Paul, or Powell, maybe Dark Powell. But he's completely wrong, and we know why, because we've talked about all of it. I don't know if there's anything else on here. Nah, whatever. We're good. Oh, no, can't. We'll leave on this note because I'm probably going to finish up here in a second. Unless you guys have charts for me to look at, we can do that right after this. But let's listen to Stanley Druckenmiller here. He's talking about Jerome Powell. I don't know exactly from when this is, but it's 1:59, and you got to listen to Stan. Yes, we can look at that 1 sec.
Honestly, I don't take the nefarious view that Powell is doing it for quote-unquote political reasons. I do think he's obsessed with the soft landing, and I think he's obsessed with his legacy and having made the mistake he made in 21. And he's being egged on by other economists in the press. To me, the Fed's job is to avoid the big mistakes, like the 70s, like the great financial crisis, like the big inflation we just had. But all this fine-tuning and worrying about a soft landing, that is not the job of the Fed, in my opinion.
Nope.
It's to maximize employment for the long term, not for the next 3 months or the next 4 months. But
wow, long-term vision, huh?
I think the Fed's obsession with nailing this so-called soft landing, I would remind everybody that the reason we're having a landing is because they let inflation go from 2 to 9%. Yeah. So
I mean, technically it was 10% by trueflation standards.
There's no need for a landing for 20 years, but...
And why aren't we using trueflation, guys? It literally shows inflation's at 0.87% or something right now, tied to APIs across every major sector of the economy, directly with businesses and groups, where you're getting real-time data and not stuff that's 30 to 60 days delayed. Why aren't we doing that? Our new Fed's going to do that. You know Kevin Warsh is going to do that. He's fucking tired of this shit.
I think that's what they're obsessed with. I don't know.
How much of a problem is the forward guidance?
It's a huge problem.
They're going to get rid of it.
My friend Jim Grant says they're forward guidance dependent, not data.
The dot plot stuff, say goodbye. It's done. All this bullshit that people follow, and like it's like we're going back to first principles. If our predictions suck ass and our dot plots sucks ass and our forward guidance sucks ass and we're never good at it, we're not going to do it anymore. And we're going to get data driven, and we're going to look at history and understand that tariffs don't create inflation, and that if we're growing and we're doing the right things and while cleaning up government spending and lowering rates and lowering our expenses for our debt obligations while growing, we're fine, and that's what we're going to do.
Data dependent. It's a problem because once you do forward guidance, you eliminate your optionality.
Yeah,
and
you want
I think,
optionality.
You and I being in this business, we know we have to change our mind when we're wrong.
Yeah.
This Fed has shown over and over again that they think if they change their mind, they're losing credibility. So it makes them have their hands tied behind their back. I'm wrong all the time. I think my record is mainly because when I'm wrong, I change my mind. Not that I'm always right. I'm certainly not. Forward guidance seems to tie them into positions where and eliminate flexibility they need.
That's the truth. That is the truth. I want to say this real quick too, and then we will look at charts. So if you guys have charts, let's take a look at them. Let me know what you want to see. I said, which is a good trade right now with AI, robotics, and autonomy taking off so well. So what is this? The paradox here is that lower rates provide immediate debt service relief, but also incentivize more leverage buildup. You're basically trading near-term deleveraging for potential long-term structural fragility. The real question becomes which gets prioritized when they conflict, keeping payments manageable or preventing excess leverage and accumulation. I don't think that matters anymore. I think with AI, robotics, autonomy, genomics, all these different sectors of growth and technologies converging together, I think you fuel this bitch because it's a rocket ship to the moon. And I think any inefficiencies you find with corruption and other stuff will take a long time to build up because there's just going to be so much deflation getting created by what we're doing. But I said, which is a good trade right now with AI, robotics, and autonomy taking off, as well as many other advancing technologies. Also, we're creating deflation through deportation of illegal immigrants. It's also being created by tariffs, which usually slow down on consumer spending of goods because of their increased price. If you look at trueflation, something that's proved very accurate, it said 1.18, now it's 0.87. So I would argue the amount of deflation being created will more than offset any inflation from lower rates. Also, zombie companies have been wiped out since the pandemic. So I'm not worried about a bunch of inefficient capital right now. This looks more like the beginning of a cycle than it does something like that. So it's more the beginning than the end. Let's look at charts, though. What do we got here? BM&R. BM&R looks good. I think I'm probably going to buy some. But here's what I like about BM&R. It's real close to the bottom now. So again, we're at the bottom end of this range. this falling wedge, tightening wedge is a good bullish pattern. I like this. Again, it's down here right now. So if this ends up being the bottom, I don't know if it's going to drop any further. I'm probably a buyer today. I might even throw like 10 grand, I don't know, maybe more into it, and just check it out. What else do we have? Cypher, I think somebody said. I'll try and get all these here. Cypher. I think Cypher is still bullish. So far, we're right at the bottom of this range, right here. Right here, right? So if we bounce, this will count as a confirmation of this pennant. So this bullish pennant that we broke above, consolidated, and if we stay here and then bounce up out of this, I think this is still a really good looking chart. I think Cypher looks bullish. I think Iron looks even more bullish, and I posted about this earlier. We'll just roll through all these here real quick. 1 second. Let me get off that screen. I mean, you had the range that we broke out of. You had the back test. You got above it. Now we're here. We really haven't fallen much at all. I think Iron is sitting very strong, and it's ready to make its move. It got rejected off that 63 range where it had the first fib, but I think it could run and get above that pretty quickly and then just make a run up here to the next fib, which is like $93. So if we get good news on Thursday, that's what I'm thinking. Now, if we don't, then it obviously won't, and it'll back test some more. But structurally, this thing is set up to do good things, in my opinion. MicroStrategy, we can look at that. I'll just try and get through all of them here. Trying to do you guys well today. MicroStrategy is bouncing off the 200 weekly moving average. It's actually bouncing, well, I mean, it isn't right now because it fell again, but you can see where it closed last week above it. It had a nice wick above it. I think it's going to do that again because there's a huge gap that's going to be formed on the daily here. So we'll probably be above it again today. We'll have tested the 200 twice. This thing is down. I might buy more of this today too. It's down 74% from its high. That is pretty brutal. There is no bankruptcy risk for this company whatsoever. If Bitcoin gets to 10K, then I would maybe get worried. But I don't see that happening. If you're waiting for that, I think you're going to be very sad. I don't think that's going to come. So just to get back to where it was, 286% return or some shit. Let me see. I'm going to see if I can grab some others. Rocket Lab. I never look at Rocket Lab, but I can. Let me see here. RKLB. This is probably going to be really outdated. I don't even know what I was doing here. Something like ages ago. I'm going to kill this. I don't even know. Oh, you know what? They probably did a split or something, and it screwed the chart up. Rocket Lab has come back a lot, hasn't it? Let's just do this. We'll look for some kind of extension, assuming this is the bottom. I mean, that makes the assumption it's the bottom. How far did it drop? $20? 20%? That's not too bad. Here, I'll just do this trend-based fib extension. If you're thinking it has already fallen as far as it needs to, then you could be looking at something like this. It's very volatile. Its next major move could get you up to like 115. It seems possible. The rocket narrative seems strong right now, but I don't follow it much, honestly, outside of that. I remember getting ready for BMNR to trade over 70. Felt like shit when total went to now 22.65. Yeah, it's dropped a lot. But that happens, though. I mean, Bitcoin not having a peak, or again, whether you think it's in a bear market or not, I don't think it is. I think that's a stupid idea. I think it deals with the economic cycle. I think that's super clear. But yeah, it sucked, right? I did already look at SoFi. I already looked at MicroStrategy. Oh, Tesla. Yeah, we can look at Tesla. Tesla has not broken out. I don't know if it's going to. I just don't know what drives Tesla higher over the short term. It could maybe just consolidate here for a little bit. Or people start to get excited because, I mean, this next year is going to be fucking crazy. So it is nice, though, that we're above this next fib. Whether you look at the retrace or whatever you're looking at, I'm sorry, two different fib trends, the longer term and the shorter term. I still think, I think Tesla is probably going to it's going to hit the 900s within a year. That's my guess. Are you expecting to hear good news on CleanSpark earnings? I am hoping to hear good news. I don't know if I'm expecting it. Again, they have clean energy, right? Renewable energy. They have Bitcoin mining, which is rough right now. They're probably running at a operating loss. I don't even know for what they're mining. But the AI narrative is huge because these guys need to get power, and they need to get power that's connected and has contracts or where they own the physical infrastructure. And so I think CleanSpark has some strategic advantages with all of that. Iron is obviously like one of the best. Nebius and all these things, CoreWeave, are all like bigger in size. Some of them can't scale quick, and they've got probably other problems. But it's probably like CoreWeave, Nebius, Iron, Cypher, CleanSpark, in my opinion. And again, I mean, what is Iron right now? Let me see what that is. What's the market cap on it? 20 billion, I want to say. Where are you? Iron. $17.7 billion is a lot. And then Cypher is 6.31, and then CleanSpark is 3. So CleanSpark is a steal in my opinion. It's just whether or not they can execute. I'm hoping they do. I can't guarantee anything. I mean, I'm hoping so. Sawyer, are you expecting to? Oh, that was you. Victor, I don't know about Human announces they were going to invest in U.S. AI director is in CleanSpark now. Humane announces they were going to invest in U.S. AI director is in CleanSpark now. Let me see if I can find that. So you're referencing some kind of news post. Let me see if I can find it real quick. Anybody talking about anything concerning Rex? I haven't seen him in a while. Wow, he put his real name. Today is 4 big externally 6 years. Just a bunch of people predicting price targets and stuff. All the same usual. Matt Schultz blocked somebody. Apparently he didn't like I called him out. Absurd CEO compensation. Well, I mean, yeah, if you shit talk him, he's going to just get rid of you. CleanSpark just posted Georgia business operations manager, AI data centers. Oh, okay. All right. Well, that's all I'm seeing for news. Iron moved up their earnings call. I know, that's interesting. Was it aligning with like Microsoft? Is that what I saw? I got a feeling that there's news that they have to report. And again, that could draw CleanSpark higher, even if CleanSpark doesn't have any good news. If Iron gets good news, I think it pulls them higher. There is a chance for a whipsaw, though, on these. So just remember that. If neither one of these earnings calls goes well, we could see something happen in the opposite direction, for sure. Let me see here. I'm just going to see if there's any others. All right. I think, guys, I'm probably going to call it here. Market's opening in 1 minute. Again, I just want you to remember, maybe stay away from leverage if you don't want to be scared and you want to get sleep at night. As January goes, so goes the year. January is great. 87% probability of doing really well. Average 13+% up for the year. We also had the first 5-day rule that we met. I think there's a lot of good things going on economically. I think this ISM number, if it's 51 or above, it should be a good day in my opinion. We just need to get the government reopened. We need to get that Clarity Act across, and we need to figure out what's going in Iran and make it to where. And guys, remember with Iran, it's not a scary thing in my opinion. Could something happen? Sure. But remember how badly Israel just fucking wiped out Iran. Not one jet down from all these anti-aircraft equipment and Chinese and Russian equipment. Nothing fucking hurt them. And then we went in and dropped bombs on their nuclear facility and blew them to shit. We will win in the end. None of that fucking stuff matters. So if we get these things behind us, I think it's going to be a really crazy start to the year. If those things are positive, I think it's going to get really exciting. I would encourage you to be positive. And also, just don't forget, we didn't cover this too much here because we didn't get into the Bitcoin section. I'll try and focus on that next week. But the Bitcoin to gold ratio is fucking perfect. It's kind of fucking perfect. If we just draw it kind of like this, where it's more straight and we kind of ignore a little bit of a dip in that middle line, this is a beautiful place to bounce. This is as good as it gets. I mean, here's the low of 2019. Here's the pandemic. Here's the low in 2022 from the Fed raising the rates at one of the most aggressive rates in history. And here's what just happened right now. This just screams to me that Bitcoin wants to go next. And I'm very excited about it. So again, if you guys sub, I will post my trades on anything that I do this morning. Otherwise, you guys have a great day, and I will talk to you later and see you guys next week. And peace out. Thank you for the 800 plus. If you guys could hit the like on the way out and maybe throw in a comment, it's greatly appreciated. You guys have a great week, and I hope you kick some ass and make some money. I know it looked dark over the weekend, but hey, maybe it's going to be a bright